Welcome back, ladies and gentlemen. This first episode of Borak Bersama Maybank for 2025 to kickstart the new year. Our analysts have prepared a surprise resumption of coverage on IHH Healthcare. Well, with this stock running up for more than 20% in 2024, I think it might be a familiar name for some of our seasoned investors. So in today's episode, we have our retail analyst, Amira Azmi, to help break down some of the reasons on why you may want to look at IHH as a potential investment in 2025. So with that, welcome back to the show, Amira.
Thank you.
Okay, so let's kick things off with a bit of a refresher. IHH is basically a healthcare operator owning and operating more than 12,000 beds across 80 hospitals in 10 countries. But to elaborate on this further, I think I will hand the floor off to Amira. Could you tell us a bit more about the company's business?
Of course, thank you. So, as you mentioned, the company is indeed in the business of operating hospitals, but also derives a small portion of their revenues from REITs and lab-related operations. So, if you're from Malaysia and have not heard of IHH, they are owners of some of the well-established hospital names like Gleneagles, Pantai Hospital, and even Prince Court Medical Center. IHH is also present overseas, and there are three other key markets that the company is focused on. This includes Singapore, Turkey, and Europe, as well as India. So in Singapore, IHH is the largest private healthcare provider in Singapore, operating 700 beds as at end of third quarter 2024, or approximately 45% share of private hospital beds across 4 tertiary hospitals: Gleneagles Hospital, Mount Elizabeth Hospital, Mount Elizabeth Novena Hospital, and Parkway East Hospital. Meanwhile, in Turkey and Europe, IHH operates 24 hospitals via their 90% owned Acibadem. And lastly, in India, they manage 28 Fortis hospitals and 6 Gleneagles hospitals.
Okay, this is this is quite big company, clearly, and with businesses globally as well. So, okay, thanks for that, Amira. Now, as
Yeah.
mentioned earlier, the stock has already run up more than 20% in 2024. So I understand that based on our analyst's latest target price, there is still potential gains to be discovered by investors. Could you just give us 3 reasons to look at IHH Healthcare in 2025?
Sure, of course. So firstly, the first point would be the nature of IHA's business. Healthcare stocks are in general considered to be more defensive in nature, meaning to say that even in an economic downturn, their services are still required by the masses. Perusing data sourced from the World Health Organization, Global Health Expenditure Database, total healthcare expenditure in these markets has grown nearly uninterrupted since the beginning of the millennium. Total healthcare expenditure even grew, or at worst, growth paused during the global financial crisis of 2009 and COVID-19 pandemic that began in 2020. So the second point would be the industry is also poised for future growth. So if we compare private healthcare expenditure in its 4 key markets against nominal GDP, we note that there is effectively a perfect correlation between the two. So as incomes grow, the number of more complex and acute lifestyle diseases like cancer, stroke, and heart diseases grow. As population age, demand for spine and joint replacements also grow. So last but not least, we look at share price valuations. By our estimation, IHH is trading at FY24, FY25, FY26 EV/EBITDA multiples of between 11 to 13 times. Perusing through the EV/EBITDA multiples for recent hospitals or healthcare group acquisitions, we note that the average EV/EBITDA multiple was far higher at 21 times. Sunway Healthcare, which is not listed by the way, and as well as Columbia Asia Healthcare, are widely touted to list on the Bursa Malaysia Exchange over the next 2 years. So we believe that IHH EV/EBITDA multiple could re-rate if the two that I've mentioned earlier, healthcare groups, do list at the multiples higher than IHH. However, IHH business profile is not exactly comparable to that of the two companies that I mentioned earlier, and this is due to the maturity of its business. Yet, if IHH FY26 EV/EBITDA multiple re-rates to 16 times, our back of the envelope calculations indicate that its share will be worth 11 ringgit and 12 cent.
All right. Thanks so much, Amira. So aside to the audience, we have a buy rating on this stock with a 12 months estimated target price of 7 ringgit 97 cents. As of right now, I'm looking at the markets and it's actually trading up by 6 cents to 7.10. Okay. And with that said, it's all the time we have for today. So aside to the audience, if you want to find out more information about today's Borak topic, you can get more details from our latest IHH Healthcare report on your Maybank Trade MY app. So just head on over on the Discover tab on the app and you will be able to find it there. If you are new to the markets and have interest in trading stocks, structured warrants, or even futures, you can approach our sales representatives at your nearest Maybank branch, and they will be more than happy to help you get starting on that journey. With that, before I sign off, thank you very much, Amira, for joining us, and
Thank
see
you.
you soon on the next coverage of Borak. So, thanks, everyone.